Hey YouTube, so in this video I wanted to cover IRS Form 4136. It is a credit for federal taxes paid on fuels. So if you are running a trader business and you have to purchase fuel to use for machinery, equipment, vehicles that are part of your trader business, you can actually file this form and get a tax credit back for whatever taxes you paid, per gallon of fuel purchased during the year. So in this example here, I have a landscaping company, right? So landscaping companies, they have lawnmowers, tractors, weed whackers. I mean, you name the whole lot. And a lot of these types of equipment require fuel to run, right? They're not all electric. And so if you're a landscaper and you have to buy fuel to run these machines and this other equipment, you can file this form to get a credit for the taxes that were paid on every gallon purchased. Okay, so in this example, like I said, we have a landscaping company. This is the form 4136. The form 4136, it's several pages long. It basically contains every type of fuel you could purchase and for the intended use. So like for example here we have kerosene purchased for use in aviation. Obviously that doesn't apply to us here. Most companies, if you're in the landscaping field, you're going to be in boxes 1 and 3, right? And so box 1 here, non-taxable use of gasoline. Again, what we're looking at here is off-highway business use. Okay, so we're not running a farm. So off-highway business use, again, right, this is a lawnmower, right? Let's say, for example. So the lawnmower, obviously you're not taking that thing down the highway. You're transporting it via trailer from your office location to the client's house to mow the lawn. So that is going to qualify for off-highway business use. Now, in order to compute the credit, you have to track the number of gallons you purchased during the year. So, obviously keep your receipts when you go to the gas station for how much you actually paid for the fuel, because that is a tax deduction. But you also want to keep good receipts to show how many gallons you purchased and how many gallons were used in that machinery and equipment. So the off-highway business use for just the standard gasoline here is this taxpayer, or this company I should say, used 1,560 gallons. So they enter that here. The reimbursed credit rate is 18.3 cents, right? So the credit is $285. And then down here, they also have some machinery and equipment that uses diesel fuel. Right, so non-taxable use of undyed diesel. Now this is really important here, be careful. So diesel fuel, they have dyed and undyed diesel fuel. The dyed diesel fuel is not supposed to be purchased and used for highway vehicles, right? So it's got kind of a red dye tint to it. So you're only supposed to be buying this and using it for farm equipment or landscaping equipment. And the reason for that is that type of dyed diesel fuel does not contain the federal and state taxes, right? They don't tax that piece. So if, for example here, this landscaper, when he bought diesel fuel for his equipment, he bought the undyed diesel fuel. So he got the fuel that was more expensive because it had the federal taxes in there. So if that's the case, you can take a credit for it, right? You can take credit for the undyed diesel fuel that you use in your landscaping equipment. You've got to certify here by this checkbox that, yes, I looked at it, there was no visible evidence of dye. And so you can take the credit for the gallons of fuel purchased for that use. Now, if you did buy dyed diesel fuel, you're not going to get a credit for it, right? Because there was no taxes imposed on that dyed diesel fuel. So it's only undyed diesel fuel that you can claim the credit for. So in this case, he's got 1,560 gallons of just the regular gasoline, 612 gallons of undyed diesel fuel. So the credit here is $149. The credit up here is $285. So that total amount of credit on this corporate income tax return, right, Form 1120, is going to be reported here on line 33, right? So line 33 includes total payments and credits. That's the $434. That number is actually sourced later in here in Part 3. So Part 3 has corporate income tax payments, credits carry forward, and then down here in line 20B, we can see our Form 4136. That's the credit for the fuel taxes. So that's where that 434 number is first coming to, and then obviously the total here, number 23, flows back up to page 1 here on line 33. So in this corporation, right, they had revenue, expenses, total taxable income, $39,000. That was their total tax liability, and then they got a credit for the fuel taxes of $434. So it's not a massive amount of money, but it adds up, right? I mean, every dollar helps when it comes to saving taxes. So again, the fuel tax credit, that's IRS Form 4136. If you're engaged in trade or business in this space and you have machinery or equipment that needs fuel, right? So that's regular, unleaded gasoline or diesel fuel, you might be able to get a credit for the number of gallons that you purchased during the year to use in that trade or business. So that covers it. Thank you for watching. Hope that was helpful. If you have any questions, please leave me a comment below. Happy to answer those wherever I can. And I look forward to seeing you again soon. Thank you.